Right, now let's welcome on board Siddharth Vora, Head of Quant Investment Strategy and Fund Manager at Prabhudas Lilladher Asset Management, joining us on the show. Hi Siddharth, good afternoon. Great to have you back on the show. How should one look at the market, Siddharth? Should one look at the positive side that yes, India GDP is doing good, the rate cuts are easing off, even the CPI number is quite favorable, or look at the other side, which is geopolitical uncertainty still persists, and add to that is the recent move in the crude oil prices. How do you see that markets?
I think the right perspective to look at the market is, yes, there are multiple positives from the macro front, whether it's rate cuts, inflation, strong growth. We need to look at it from the perspective that we're coming out of a sharp rally over the last 3 months. So in my opinion, I think a lot of good news is already priced in, and one needs to be a little cautious, from here on, given we don't have too much valuation headroom in India anyways. We were always an expensive market. We corrected a bit, and now we are back to an expensive market. So all the good news is actually known by everyone. Bulk of it is also priced in. I think in the near term, we could see some sort of profit booking or consolidation coming out of the strong rally and the lack of fresh upside triggers in the near term. So I think in the near term, I believe we could see a marginally corrective market. But again, that's a very short-term view. From a medium term, we do believe that, quantitatively, we're in a very healthy, favorable, and stable market conditions. All our sentiment indicators have been positive. We flagged off, a market recovery outlook early, like first week March, last week Feb, and I think that's played out really fast. We thought it would play out over, 6-12 months, but I think it's played out over 2-3 months itself. So yes, I think the good news is getting priced in faster, and that's a good sign for the market. Could see some narrow range consolidation in the medium term.
Right. Hi, Siddharth. This is Ankita also joining in. Siddharth, let me, talk about what you'd spoken the last time you were here with us. You had mentioned that you'd exited from the discretionary, consumer discretionary pack. You had exited travel and tourism, and you were looking at themes like alcohol. Now, there is a news that came in, as far as the increase in excise duty is concerned, and that space, entire space, is subjected to government policies. How are you looking at it right now? And the other, pack that I want to talk to you about is the IT, perhaps, which is seeing a re-rating that's already come into play. How are you looking at the IT pack as well? Because that's the only sector, even today, that's holding the fort in a market like this.
So, from an IT perspective, I think even on my last discussion with you guys, I said it's a tail risk sort of play in our portfolio. We've had a 12-13% sort of allocation to IT for the last 2-3 months. Despite, all the globally, negative cues, US risks, we still had IT because of its, free cash generating nature, comfortable valuations, at least on the large cap side, and traditionally giving a low volatility sort of defensive exposure to the portfolio. I think from a volatility, quality, and valuation perspective, IT was fitting right in the, quant strategy. And therefore, we've maintained our allocation, and it's doing really well now. I think where the rest of the market is seeing, some sort of profit booking and correction, IT is playing out, as we called it, the tail risks play, global play. So I think both IT and metals are playing out well for us. They were contra positions at some point, but now they are turning favorable in the current market cycle. Coming to, alcohol, we've only had, one name in our portfolio for the last 4 or 5-6 months now. It's been Radico. It's done really well for us so far. And, despite everything, we continue to maintain a 2-2.5% sort of allocation to Radico. And we will stick to our position till we see any major further development from a quantitative perspective. Fundamental triggers can keep changing, but quantitatively, from a factor standpoint, Radico still continues to hold strong across multiple factors that we evaluate.
Along with that, Siddharth, help us with your view on some of these capital market plays, because of late, and if I talk about the last month specifically, there's been no stopping in most of these counters. What's your sense that for how long this run-up can continue, and what factors do you believe are at play for this?
So I think in our portfolio, we have a significant allocation to the entire capital markets play. It's contributed to our alpha for the month of May and June as well so far across the board, right? Whether it's asset management companies, broking companies, some other platform companies, exchanges, or other capital market ancillaries, most of them have done well. And we continue to sort of hold this story. Within our financial allocation, I think it's lenders, capital markets, and insurance. These are the three broad pockets we've allocated. And within this, capital markets holds the relatively higher allocation. And from a quantitative perspective, we believe we are well positioned to ride the wave in capital markets. It's a structural story, but we are not structural participants. We will stay in the story till quantitative triggers stay intact. The moment that changes, we'll be out of the story. So I can give you a fundamental view that, okay, 3-5 years, this is a great area with visible growth. Valuations are rich. Cash generation is very good. But I know for a fact that if the market structure were to change, if there was excessive volatility, we would be the first ones to be out of the sector as well.
Right, point taken, Siddharth. Thank you so much for taking the time out and joining us today. And well, with that, it's time for a quick breather on markets at noon. We'll be right back with more market updates on the other side. Stay tuned.